With less than 3 weeks to go into the presidential election, all eyes are on the United States and on the country's economy. Indeed, throughout this COVID ridden year, the financial steps that the Federal Reserve has taken may have pumped some life into the economy in the short term, but the long term effects of QE and other stimulus efforts are yet unknown. Some analysts believe that quantitative easing may have saved America's economy. For others, the outlook is not as optimistic. In the cryptosphere, it seems that the overall consensus may be that while quantitative easing may have disastrous consequences for the dollar over the long term, the stimulus may have been a positive thing for Bitcoin and other cryptocurrencies. However, is what's good for Bitcoin also good for the world? That remains to be seen. Recently, finance magnates spoke to Alex Mashinsky, chief executive and founder of Celsius, as well as Miko Matsumura, founder of the Evercoin exchange and general partner at Gumi Ventures. We spoke about the possible consequences that the presidential election could have on the economy and what continued federal spending means for the future. And, of course, about Bitcoin. I'm Rachel McIntosh, and this is FMTV. Alex and Miko, once again, I want to thank you so much for coming on the show with me. It's such a pleasure to talk with you both.
Yeah,
Thanks,
it's great
Rachel.
being here.
Yep.
So I know who both of you are. Just briefly, can you tell our listeners who might not know about yourselves a little bit about who you are and what you do, starting with Alex?
You want to go first?
Sure, I'm happy to take a crack at it. So, so I'm a general partner with a venture fund called Gumi Cryptos Capital. I'm also a co-founder of the Evercoin exchange, and I guess longtime friend and old-time Celsius advisor. So, happy to see Alex on here as well.
Yeah, thanks, Miko. So I'm the founder of Celsius Network. Kind of been in crypto since 2011. Before that, before Celsius did 7 other startups, all tech startups, communication, internet infrastructure, stuff like that. And our focus has been to kind of deliver yield to 7 billion people around the planet, right? That was why we created Celsius. And I'm very happy to see that now 100 other companies think that's a great idea, and we created a whole industry out of just the fact that the banks and central banks don't want to pay us anything for our money.
Yeah, excellent. Thank you both. So we've had both of you on the show before. Both of you have commented at various times over this year, the last couple of years, for finance magnates. But I wanted to bring you guys on here today to just sort of reflect on what's happening right now in the world. Obviously, there's a lot going on, and we both of you have commented at various points throughout the year, about election-related things, about COVID-related things. And as we're heading into the final countdown before the election here on November 3rd, I just kind of wanted to get both of your perspectives on, sort of everything that's led up to this moment in crypto, and also sort of what could be next. So I'm gonna be asking some fairly open-ended questions, and I hope that you'll take them basically in whatever direction that you want. So the first question I sort of have for both of you is, and please again feel free to answer this in the way that feels most interesting to you, is when it comes to the election cycle and sort of the up and down news of every day, as well as predictions about who might win and who might not, what kind of effect is this having both on the economy at large, and how is that effect bleeding over into the crypto industry?
Well, I'm happy to kind of take a crack at it. I think it's always challenging in some ways to talk about the political, because of course there's a wide range of different political interests embedded within the cryptosphere. But I do think that one of the things that's so intriguing is when you think about the attention economics of what's happening. I think neither party or anyone would deny that, there is a kind of a Twitter or social media oriented kind of presidential candidate, that would be Trump, and that, in some ways his political methodology involves kind of gathering attention to himself, right? And that the thing that's so intriguing about what's happening is that, we're starting to see, that there's a lot of uncertainty around the election. So it's pretty complicated, right? I mean, one of the weird things that I think is happening with an asset like a Bitcoin is that Bitcoin is almost like a Twitter celebrity by itself, in a sense that,
Definitely. Yeah.
so, I like to call it a janky asset for a janky time, in the sense that Bitcoin cries a lot on Twitter, and I'm being a little facetious since
But yeah,
there's
so what
no.
do you mean Bitcoin cries a lot? What is that?
Well, what I mean is that it has volatility by its nature, and that I think that this volatility is actually attention getting, and so the thing that's so strange about what's happening is that we're seeing these layers of the historical economy, right? So if you look at one of the ways of looking at the layers of the economy is to look at them from the perspective of Abraham Maslow and the hierarchy of needs. So you can see that there's a primary layer. Right. And then there's kind of like layers above that as you kind of like get, further north. But one of the things that's so crazy about decentralization at this point in kind of human history is that decentralization is a response to authoritarianism. But the thing that's so interesting becomes the social readiness for something that is, effectively leaderless, right? Because, I think in times of uncertainty, people tend to look for authorities rather than looking for
Mm.
things that are fully decentralized and open source and run by a bunch of Ethereum hippies or whatever it might be. Not to be pejorative, by the way. I consider myself to be an Ethereum hippie. So,
Yeah.
so yes. Anyhow, I just want to throw that all out there as like a big spitball because I know that like Alex is very knowledgeable about banking and about like all of these kinds of things, and I'm sure there's juicy things for him to bite into on all this landscape.
Well, I agree with everything you're saying, and I came to this country, to the United States, 32 years ago. Land of opportunities, the place where both democracy and capitalism is just thriving and living wild, right? But today, really, the Fed and the government are running the U.S. economy, right? They decide who's winning, who's losing. They put a safety net under the U.S. economy, but the problem is the safety net has these giant holes in it, and all the small businesses falling through, and all the giant businesses who are too big to fail get all the money, and they will live like zombies forever. Like it's like Japan all over again, right? Deja vu all over again. So I think the Trump administration is definitely a form of centralization, right? And I think in the crypto, we're all fighting for decentralization. Biden is not much better because Biden is new taxes and new healthcare policies and things like that, which is more spending, which is stuff we just can't afford, right? I mean, in theory, what we were supposed to do is save during the good times and then spend it during the bad times. But now we're spending during the good times, and then we're spending even more during the bad times. So capitalism is just not alive and well. And I think that's really the opportunity for decentralization, is to reinvent capitalism, reinvent the financial infrastructure. And you layer COVID on top of that, and basically the world economy is in a vice, right? Being squeezed by something. So it doesn't matter what every central bank in the world does, or it's like in a straitjacket, right? Trying to, the central banks are coming and injecting adrenaline into the world economy, but it's still in a straitjacket called COVID, right? So it's a global pandemic. So just, I'm trying to find the most visceral analogy here to explain to people, because people are like, no, we're getting out of the recession. I'm like, the recession hasn't even hit you yet.
I know, we haven't even started. We're just getting started here.
Exactly. Yeah. It's a slow moving wreck that got like a delayed, like, instead of taking 100 frames a second, now we're doing 10,000 frames a second. And we're like moving real slow, but we know it ends the same way with everything crashing, right? So all of that's supposed to be good for crypto, to bring it back to crypto, right? It's supposed to be Bitcoin is a doomsday insurance policy, right? That's what it was invented for. And Ethereum is the rails to replace all of that infrastructure that is, like, again, failing because it's centralized and because it's not acting in your best interest, and everything Miko has been talking about for the last decade, right? So I think that is the opportunity. But when you look at the charts and you look at the S&P chart and the Bitcoin chart, and they just dance together day and night, and you're like, what the heck is happening here? Right? They're supposed to be decoupled. Bitcoin's supposed to be dancing with gold, and it's not doing it. So right now, the problem we're having is that most of the players who are, again, the crybabies on Twitter, most of these traders are also trading the stock market. They have the same way of thinking. And until we open it up and bring 1 billion people who are in crypto for the right reason, they're in it for yield, they're in it for retirement, they're in it for diversification. Until that happens, we're going to still see that correlation instead of the opposite. So it's just, again, and I'm not blaming other people. I'm saying all of us here, we have to work on it. We have to solve the problem. We have to create product that people will consume because they need it as a retirement plan, because their life insurance or the retirement insurance is not going to pay for them. They're not, all those things are bankrupt. People just don't understand that.
Yeah, Miko, do you wanna jump in?
Yeah, I mean, I think to me, like, it is there's a couple of ways to look at this. You know, I would say at the level of kind of the political, like, I think that, you know, what Alex is alluding to about sort of, you know, I don't think Alex is necessarily kind of one of these both sidesers, but I think what he's pointing at is he's pointing at that there isn't a magic wand, right? Which is that, like, and the plans that are already stated, none of the plans on either side involve a magic wand, unless you consider infinite QE a magic wand, right? But one of the news stories out this morning, actually, that I thought was really interesting is it turns out that the Fed pretty much doesn't have any treasuries left to buy. So, you know, if you look at what Fed economist Michael Kiley has stated, you know, he actually is wanting 3.5 more trillion in QE, right? But the problem is that there aren't actually 3.5 trillion in treasuries that are just hanging around, right? So it's like he wants to go shopping, he wants to go on a spending spree, but there's nothing to buy, right? And the problem is the Fed already owns about 30% of all the mortgage, right? So they can't just buy other things too, right? And obviously they've already started buying corporate bonds, but like that's extremely terrifying, you know. And so the thing that's really kind of interesting is that, like, you know, it's definitely like I forgot the parable from Holland where the little kid puts his finger in the dike. You know, he's trying to hold the sea back with his finger. Anyhow, it's a little bit like that kind of situation, right? Because, you know, if you look at the impacts to this kind of expansion, you know, the Fed balance sheet increased by $3 trillion, you know, between February and June, right? So like it's yeah, so I concur, you know, that the data absolutely seems to show this, and there does not appear to be, you know, I mean, there's many other categories like social justice, and there's many other categories of differences between, you know, the candidates in the presidential election, you know, but I think in terms of the economic macro spending plans, you know, they're both going to spend money that doesn't exist and print more and, you know, do QE things. So that I concur about that.
Yeah, absolutely. I mean, the way that you did describe it, it just sounds, I mean, that basically, I guess what it is just like it's like money is broken. Like the whole idea of money is just like that they're right now that we're in the state of, like, sort of, as you said earlier, Alex, like when times are good, we spend. When times are bad, we spend even more. And it's just sort of this never ending machine that just needs more and more to survive, but there isn't anything more at this point, basically.
Look, I brought my own props here for...
Okay,
cool. Where is it? Oh, wait a second. I'm turning Japanese, you know that song? So the point is that the Japanese central bank is about 20 years ahead of the rest of the world, right? They're already done everything Miko is talking about. Bought all the treasuries. And then when they ran out of treasuries, because all the Japanese guys are issuing debt in their own currency. So they bought their own treasuries. Then they went and said, okay, let's start buying all the ETFs. Now they own 70% of everything that is securitized. They own 70% of all the equities or more, about 80% of all the treasuries, the JBs and so on. So when you get to that point where effectively you have a zombie economy because the central bank is, like I said, has a net underneath everybody and no one can do anything, that is not capitalism, right? So the idea that the central bank needs to save the economy every 10 years is just a false premise, right? I mean, that's, again, modern economic theory, which is just neither modern or a theory, right? It's just a disaster. So for thousands of years, we've had cycles, and there you can read about it in the Bible. They know that the cycle is every 7 years, and that's why you got to save it. On the seventh year, you're gonna have a drought, and so I'm like,
it's a plague of locusts. I think
exactly.
that's
So
the common.
So none of that is new, right? So yeah, maybe the cycles are now 10 years or 11 years instead of 7 years. But the issue is that if we don't cleanse the economy from the ills of basically easy money, then we don't get a new cycle. And what we're having right now is a problem where we have this continuous cycle. Basically what the Fed is doing is stretching the cycles to 20 or 30 years. And then you have a depression. You don't have a recession. So again, this is also an opportunity. The opportunity is to create a new economy, right? What is crypto? What is blockchain? What is all these new rails? It's a new economy because it has nothing to do with any of those things. There is no central bank. There is no anybody who can come and say, okay, Satoshi, I'm changing your protocol. We no longer have limited supply and all the beautiful things, the deflationary cycles, all the beautiful things that are good for you. They're in your best interest. So, and again, this was born, right? Bitcoin was born from the ills of what I'm talking about. Yeah. So it's yin and yang. I mean, and some of the world's smartest people go on TV and say the dumbest things in the world, and they have Nobel Prizes, they have the medal to show how smart they are. And they're talking like we're all idiots and we don't understand what's happening. So all I'm saying is that currently the system is not designed to help you, the average Joe, the average person. It is not. Neither the government or the central bank is trying to help you, the person. It is just trying to maintain the system as it is, and the people who are close to the plate get everything they want, and the people who are not close to the plate get punished.
Yeah, I think that I gave a talk about this that I call the extraction economy, right? And if you kind of think about this in terms of what I described earlier in this kind of Abraham Maslow concept, like I think the base layer of abstraction or extraction has been kind of like minerals and natural resources and this kind of thing, right? So that, we're seeing a huge kind of sucking sound in that department. And obviously the externality eventually is that, there's no environmental resource left, right? So, like half of the Great Barrier Reef is dead, and, we're seeing all kinds of crazy externalities about environmental extraction, right? But the thing that's really fascinating about what's emerging is, we were talking also about the extraction of attention, right? And, that layer is actually just further enhanced by, companies like Facebook, where they're just taking the activity of human attention and they're extracting the value effectively by using AI bots that, show people advertisements, right? So that's kind of that. And, for the longest time, these things have been done fairly relentlessly, right? And so when you look at the state of the economy, there are these kind of like pitiful attempts to sort of try to mitigate these things, right? Like people talk about the sharing economy, and it just sounds so wonderful. It's like, oh, people are sharing, like how kind of them to share. And it's like, no, like that's just more extraction, right? But it's like it's the little guy's extraction, but they're not even extracting because they're being extracted upon, right? So the idea is like, oh, well, why am I driving an Uber? And it's because the only thing I actually have on my balance sheet is a car.
Yeah.
So how can I extract from this thing that I have, right? And then it's kind of like in Airbnb, it's kind of like, well, I have a house, and so how can I extract more value out of my house? So then the little guy becomes an extractor rather than an extractee. But the thing that's crazy is that Uber sits on top of them and extracts from them, right? And Airbnb extracts from them. So like the thing that I think is inescapable is I think what Alex is describing, right? So the sharing economy is really just a reaction. And to me, the thing that I think draws all of us back to the kind of baseline is that, the idea that Alex postulated about an alternative economy based on blockchain-based cryptographic assets, right? Like he was really talking about how you can't increase the supply, right? And I just want to touch on like why can't you? And the reason
Yeah.
you can't isn't some kind of like anything other than consent, right? Because people want Bitcoin to be the Bitcoin. And they want, and I want to own. If I launch something that was called QE coin, that just printed itself infinitely, like how many people would consent to use it? Like zero. People would be like, I don't want to use that. That's terrible. It's like a shit coin. Like why would I do that, right? And
Right.
so the thing that drives this entire network is consent, right? So I mean, anyone can create any software as long as they're reasonably software proficient, So the point of Bitcoin is that people consent to use it, and they consent to use it because it has rules that they understand. And one of the rules that everyone can understand is the limitation of the supply, right? And of course, anyone can make anything that behaves in any way, but the thing that makes it impossible to change Bitcoin is consent, is that nobody wants to change it, right? That's that, and no one will want to change it because it's working. Like Bitcoin's working.
Yeah.
Yeah, and it's
And
doing the
when we get
opposite.
sorry,
Yeah,
go ahead, Alex.
just to continue that train of thought, it's Bitcoin is doing the opposite of what the central banks are doing. I mean, there's a great chart if you just Google it of how much money the top four added. So again, the Fed, the ECB, the Japanese central bank, and China, and it's over $20 trillion since 2008, right? So 20 trillion, right? So to Miko's point, on one side you have this unlimited printing where you think you don't feel it, but of course you feel it because all of this new money is just inflation, right? Your earnings are not going up. It's just that the value of the money is going down. In dollar terms, the dollar lost whatever 90% of its value since
Yeah.
it went off the gold standard. So
Mhm.
so I think the reason Bitcoin has limited supply and any successful Excel token, our token is up 2,000% in the last 12 months. It outperformed Bitcoin by 1,500%. Why? It has limited supply. It's one of the very few projects that under no circumstances there will be more sell token, right? So that is what's missing from the world. When people go and say, wow, how did you guys pull this off? We didn't pull it off. It's just that the central banks are so bad that they make us look great. They don't pay you anything. They print money. They dilute you, right? They don't let you to monetize your value. Like Miko said, like back to the Uber analogy, Uber has never once in its life had a day where it made money. It subsidized $14 billion worth of rides for these people who then it took a piece out of its own subsidy and paid the driver much less than they used to earn before Uber existed. So the whole value chain is only feeding on itself as long as there's free or cheap money that is feeding the flywheel, just like free tokens from Compound or from all these other projects. I mean, there's no value being created, right? So you want to create value, you need an economic system in which value is created because people actually are adding, like the capital that they're contributing, which they worked really hard to create, right? All that money is actually created because people go to work and they convert their time into dollars or yen or euros or whatever. And if that capital is then put to work in a productive way, then you have real GDP. When it's being put to work just as financial engineering, which is all we had since 2008, all of this, there was $7 trillion worth of corporate buybacks just since 2008, meaning all of that GDP that the Fed is being reporting to you, 90% of that is just debt that corporate America piled on so they could pay themselves dividend, just like Uber is doing effectively, and pretend like everything is wonderful. And when the music stopped, the Fed came and said, okay, don't worry, we'll issue all the debt you want. Record debt in the history of the United States of America last quarter. We're in the middle of a recession or a depression. How is that possible? Because the Fed guarantees to buy all that debt. So none of that is true. None of that is real. You know, I grew up in the Soviet Union where the government told you every day what was the price and what was the inflation, what was whatever. We're not too far away from that right now.
Yeah. Mm-hmm.
Yeah, I think that one of the harbingers of what you're describing with respect to this kind of fake economy is that, like, there was actually a pizza shop. This is not the Laszlo pizza shop with the 10,000 bitcoins, but another pizza shop. And what they discovered was this concept of pizza delivery arbitrage, right? And the way it works is this. The way it works is that if you have a coupon, you can actually buy a pizza for $22, right? And it turns out that the bill of materials is like $7, right? And so what they ended up doing is they basically ended up buying the pizzas from themselves and delivering it, because the intermediary was actually Postmates. And what's happening is it's basically, so in any kind of scenario of arbitrage, you have to try to understand sources and sinks, right? And so the thing that's interesting to understand the source and the sink is the source of the money is venture capital. That's where the money's coming from, right? And so this clever pizza shop started self-ordering pizzas, and the way they would do it was super clever, which is that pizza dough is basically a value, right? So what they would do is they would basically order a pizza, and they would just put raw pizza dough in the box, right? Mm-hmm. And then the person delivering would show up, and then they would look confused, and they would be like, this delivery address is the same as the pizza shop. And then they would be like, yeah, just put the pizzas down over at this window, you know, and we'll tip you really well, you know, and they just started creating a loop, right? And so the thing that I wanted to emphasize there is, why does this exist? And the reason why it exists is because the vanity metrics inside of Postmates and the food delivery actually are that if they get more deliveries and more users, right, they can continue to be loss-making, just the way Alex described, right? But the point is that if their revenue increases at the rate that they want, then they can do an IPO, right? And then they can kind of soak all of the crazy guys trading on Robinhood, right? So you know, this is really, you know, a classic example of this kind of like where you know, where the economy has come.
Yeah, it's a hot potato concept where the potato, everybody just hops the potato to the next person until the music stopped. And now that the music stopped, we are still behaving like the music hasn't stopped, right? I mean, Uber rides are down something like 80%, but the stock and the debt is still trading as if it's an extremely valuable company, right? So again, there's dislocations in our economy. The non-crypto economy is not, the debt market, the bond market is telling you the completely opposite story of the stock market. And sooner or later, we're all going to have to pay the piper, right? You cannot just keep printing money, we're now at $27 trillion in deficits, government deficits, right? Each baby born in the United States owes $200,000 to the rest of the world.
That's so crazy when you say it like that, yeah.
But that's what it is. People don't understand that. They think it's like, nah, it's just fake money. We're just piling it over there, and no one cares about it. So there's only two outcomes to that. You either pay it back, or you have to devalue and debase your currency so much that no one would ever use the US dollar, right? So the richest country in the world, has more debt than any country in the history times 10. Okay, so we are the most in-debt company. I did an AMA, and I was explaining that to people. I said, most people think America is the richest country in the world. No, We are the country that buys the most, but we're not the country that actually earns the most. We just have tremendous amount of debt that we will never be able to pay back.
Yeah, I mean, it's just amazing, like, to think. I remember I was speaking with Roel Wolfert, who's like a former Visa executive, and he was saying, like, imagine a world where every child that's born, he was saying essentially the opposite thing. Like, as soon as that child is born, like, they have access to all of the value that they will create throughout the course of their life. But we've created this situation where it's actually the opposite. Like, as soon as you're born, it's like, being born to a drug addict parent or something like that. Sometimes babies, this is kind of a dark analogy, but babies who are born, to heroin addict mothers will be born
right.
heroin addicts themselves.
Look, you go back only 300 years and you were a baby, or your parents had 6 or 7 because they put you to work when you were 12 or 13 and you started producing money for the family. Right now, I'm not saying that that's what we should do. I'm just saying that children used to be productive assets. Today, kids go, they have to obviously go through high school, then they have to go to college, then they get a 2nd degree and a 3rd degree, and then they go on a sabbatical because they need to travel before they start working. So now they accumulated, I don't know, $300,000-$400,000 worth of debt, and now their life starts, right? I mean, it's just crazy. So we went from one extreme to another, where you need to have so much knowledge and so much expertise to be productive in this economy, or you become an Uber driver and you earn $15 an hour, right? These are the two extremes. And the problem is that this, again, this economy works for the 1%. It does not work for the 99%. And we have to fix that. We cannot have, we have to convert that into a society. I'm not going to just talk about the problem. I'm also giving you the solution. The solution is that we need to stop valuing people and society based on how much profit you can generate, and replace it with valuing people based on how much contribution to society you have. Okay, and when I look at Ethereum, when I look at Vitalik, I measure him and the 60 billion worth of value that he created as contribution to society, right? He created a whole new economic system. So versus, okay, how much profit does it generate? Ethereum doesn't generate any profit, right? The miners generate profit. The people who hold ETH generate profit, but Ethereum itself is a non-profit. So that way of thinking, which most people don't understand, like when, Miko is a devout Ethereum. Me too. I mean, the model is so beautiful, and it's just an improvement on the model that was beautiful in the first place, Bitcoin, right? So most people just don't take the time to either dig or understand that they're here for the riches. They're like, hey, I'll buy it at 100, I'll sell it at 500, and I don't have to work for a living. But we, the three of us are fighting for it as a way of living. We're fighting for it as a better future for our children.
Yeah,
and I have 6 of them. So
I totally concur. I think the thing that is so interesting is when you look at Ethereum, or so if you look at Bitcoin, I like to say it's sort of the bank of the internet owned by the users, right? Now, obviously, like, it's not a panacea, right? Because if you look at, things like wealth inequality, like, if you graph the wallet sizes on Bitcoin, it's no different than any other wallets, it's a power law distribution, which seems to kind of almost be an emergent property of systems, right? But the point that I'm making is that Bitcoin itself doesn't need to be a panacea, right? Because Bitcoin is just a software package, right? And there are other software packages, and those will solve other problems, right? And that's, to me, the promise. And the thing that I'm excited about is exactly what Alex touched on, is that, open source doesn't compete on the basis of profits. It competes on the basis of consent. Right. So really, the most successful open source projects will be the ones that get the most consent of developers, of users, of, anyone. Right. And so, I think that's the measurement of success. Right. Because if people are using your thing, then it must be useful. And if they're not using it, it must be useless. Hopefully, ideally.
Right. So Miko, before we actually officially sort of went on the record here, you spoke briefly about, sort of whether open source will eat money or whether money will eat open source. I'm not getting the wording exact right, but can you talk a little bit drill down into that.
Absolutely,
Yeah.
absolutely. Yeah. So, to me, open source is like this matrix that competes for and on consent, right? And so the winners of open source are the winners that get the most amount of consent, right? That's the currency of open source, right? Now, obviously, the thing that's happened with the advent of open source monies is that it's gotten really interesting, right? Because you're now mixing consent with profit at some level, right? Profit in quotes, right? And so the
Right.
thing that's funny about all these games is that either greed kind of overwhelms open source and it turns into a cesspool, or it flips the other way, and this whole project ends up kind of cleaning up the system that we have, right? Because the thing that I think is the power of this open source financial infrastructure is that like Mises, who's an Austrian economist, postulated that all economic activity flows from dissatisfaction, right? Dissatisfaction, right? So if you think about that, then economic consent is really the process of working with the systems that help decrease the dissatisfactions, right? You're scratching an itch, right? And so if you think about it from that lens, then if you continue to perpetuate open source systems, especially infrastructure, then what you hopefully will see is you'll see that the most dissatisfied people will embrace such systems and give these systems their consent, right? So that's the theory, and we'll see if it turns out, because one of the things that we're seeing as an asymmetry is we're seeing that in today's society there may be a knowledge and educational barrier, right? Which is that the people who are the most advantaged by such systems may be overly controlled by an information apparatus that is being developed by those who seek to exploit and extract from those people, right? So in some sense, it's possible that people won't buy into what's good for themselves. It's possible that they'll just be fooled into kind of playing along with a system that's bad for them. So those are the stakes.
Yeah, well said. And just to add to that, you have to think of money as water, right? It always wants to flow downhill where the yields are higher, right? So money is trying to go to the places where it does the most good. And you have to think of the banks and the financial system we have today as like this dam that the financial system built that's holding the money where they want it, because that's where they can extract the most value out of it. So if you just crack the dam, or if you just allow the water to go around the dam, it will all flow to the other place. So the competition, and I totally agree. I mean, Bitcoin is open source money, and we call it MOIP, or money over IP, right? Just like VoIP is another form of free communications that, again, bypass the dam that the phone companies created to hold back communication and charge us as a toll collector huge amounts of money to just talk to each other. Right. And the internet said, no, we don't need a dam. We're just going to go around and use different rails together. So money is the same way, right? Money over IP allows you to earn this amazing yield. You can grab it, convert it into digital form, put it on DeFi, and suddenly you're earning, Celsius pays 100 times more than JP Morgan, 100 times more, right?
Yeah,
and our digital currency is backed by US treasuries, meaning when you give us your dollars, first a trust company buys a US treasury with it, then gives us the digital representation, and we earn yield on it, bypassing this dam, right? So who will win? I have no doubt who's going to win, right? Because again, JP Morgan is going to wake up one day and realize that their dam doesn't have any water in it. All the water went around it. Because where do they get all their money? That's a piece that most people miss. Most people think that the bank is a very rich institution. Banks trade at the lowest multiple on Wall Street, right? Apple, you name a company, a tech company, it's trading 3 or 4 times the multiple of banks. Why is that? Right. Because every quarter they have to distribute all their profits to their shareholders, either dividend or stock buyback, right? So, and they get all that money from all of us, right? All of us work really hard, take our money and give it to the bank for free. We expect nothing in return. That's why banks are not your friends, you know? So all you have to do is allow the water to flow around that dam and ignore the dam. No one gave JP Morgan exclusivity on yield creation or money management or anything else. So if there is another institution that does 100 times better, then the only person you can blame, and I'm talking about to the viewers, obviously not to you, but I'm saying the only person you can blame is yourself for continuing. It's like an abusive marriage where one side just beats up the other side and the other side just keeps coming back and say, okay, beat me up again, no problem. That's what we do every time we make a deposit in the bank. They charge us to deposit, they charge us to have an account, they charge us ATM fees to withdraw it, they charge us inactivity fee, right? I already gave you my money. How can you charge me for the fact that I gave you my money? I mean, it is ludicrous, right? The fees that these people create. Wells Fargo doesn't even go in far enough. Wells Fargo created fake bank accounts, 3 million fake bank accounts. They got fined billions of dollars for that because they got caught. Fake bank accounts for people so they could charge them another $20 a month for the fake bank account that they created for them. I mean, the lunacy to which people, and no one went to jail, right? Not a single person went to jail for any of this. So that just tells you that the system is just crazy, right? When people do that kind of stuff just so they could pay themselves a higher bonus, right? Mm-hmm. So all I'm saying is that the freedom is there, the opportunity is there, the capability is there, money is going to earn that yield. You just got to let it flow around all these artificial barriers and toll collectors in the financial system who are holding us back.
Yeah, I mean, damn, Alex. But so is this what you mean, you know, sort of, I think this is sort of maybe a kind of a broader statement, but this is part of what you mean when you say that decentralization can reinvent capitalism, you know,
if you listen carefully to what Miko just said, right? You cannot stop it. It's again, it's like the components of it's not even the atoms. That's like the quarks of the future, right? I mean, it doesn't matter what you do, you're not going to stop that, right? So right now, the regulators and the banks and everybody's resisting it because they're saying, look how good we have it. Why are you trying to shake up the boat here? But the issue is that humans in general are just looking at this and saying, no, this is not a fair system. This is not a system that distributes value based on any logic. There's no logic to the fact that you have to work 12 hours a day and then what you worked for depreciates because it gets, you know, here's the scissors, right? The government comes and it takes a piece, right? They debase the currency and they take a piece, and then the bank take a piece, and then this guy take a piece, and it just eats away at you all day long, and there's nothing left.
Yeah.
But you're the one who created all that value. There's no value created anywhere else, right? The banks don't create value. They create money, they create debt, but they do not create value.
I think that just to extend your thoughts, I highly recommend a book called Debt, the First 5,000 Years. And it's pretty fascinating because one of the key events in sort of the financial history of the world is essentially the securitization of debt, right? Because the thing that used to happen is that there used to be a debt between two parties, and those parties were individuals, right? Mm-hmm. So what happened is that like there would be Alice and there would be Bob, and Bob would go into debt with Alice, and then basically what would happen is that, what would happen is, for example, like, Bob would say, oh, like my crops are not doing very well this year. And Alice would say, okay, that's fine. Like you'll get me next year and things will be all right, And so they would have this relationship, right? And so the securitization basically enabled the next layer up. And the next layer up is really interesting, right? Which is the next layer up is not just depersonalization and marketization, but also the AI layer, right? So that, at that point, it becomes really kind of extraction at the highest level, right? And so, when you look at debt, like, I think Alex was talking about like student debt, right? So student debt, like there's so many stories where it's like, well, I borrowed 80,000, I paid 70,000, and now I owe 120,000. So it's sort of like do the math, right? Like it's you're never getting off this wheel, right? And that's crushing, and it's absolutely kind of exhausting, right? And I think there's a lot of people that are starting to experience the world there, and that's just visible debt, right? The invisible debt is the debt that the babies are born with, right? So the babies, I think the last time I calculated it, it was $50,000 worth of debt for every baby, but like it's absolutely has to have doubled since the last time I looked. So
it's over 200 now.
Yeah, bang, it's quadrupled since the last time I looked. Okay. So so the bottom line is that the thing that makes me hopeful is this, right? Which is that the way I would expect things to turn out is I would expect that the beneficiaries, right, the 1%, the kind of people for whom the system is going beautifully well, would actually sort of spend money to defend the system and to kind of continue to sort of hypnotize people and make them think that there's no alternative. And in fact, there's even a slogan called the Tina economy, right? And people are saying, well, why are you invested in stocks? And people are like, well, Tina, because there is no alternative, Tina, right? And it's like, but there is, right? There is an alternative, which is sort of Bitcoin and Bitcoin's cousins and, all the other things. But I would say that like people are hypnotized, right? But the reason why I'm the most hopeful in the long run is that the reason they can't fight, and the reason why I think Alex is right about water doing its thing, it does it by itself, is that at the end of the day, what we're talking about is free software, right? And the question becomes, how does anybody fight free software? Like, you can't fight free software, right? So that's the reason why central banks are looking at CBDCs or digital currency projects, mostly based on blockchains, right? Because someone came up to them and said, would you like to have some free software? It'll make everything run better, and it'll be cheaper, and it'll work faster, and you'll save a ton of money, right? So any organization that says, no, thank you, I would rather spend money on software than have free software that's just as good or better, is just going to die, right? So the point is that's the thing that makes me hopeful is that, by itself, what will happen is that free software will just win as a function of being better and as a function of being free.
Yeah, and you're 100% right, but even free software comes in 3 different flavors, right? So let's say that all central banks realize, okay, this money printing where we have a press at the basement and we actually take some cotton and or plastic, in Australia and other countries, actually money's made out of plastic. And we run it through and we're replacing all of that with the blockchain. Well, no central bank in the world, in my opinion, is going to create limited supply, right? Because they need to print more money. So you're not going to create a Bitcoin competitor, right? So basically you have 3 horses competing for the future of money, right? You have the central banks who are going to maybe run on a blockchain, but they're going to have unlimited printing, right? It's just digital printing instead of normal printing. You have the Libra version, which is like people who are basically saying, look, we're giving you this free money, free software, free everything, but all we want is your information. Facebook, the only thing it's missing, the only thing it doesn't have, it knows everything about you, but it doesn't know your financial transactions. So now it can come in, and by giving you the ability to move money around and pay things on the blockchain, know 100% of who you're interacting with, who you're paying, who pays you, and so on, right? So that's their main incentive for the reason. And then you have the open source public blockchain, which has limited supply, right? So the 3 horses are competing, and you think, well, these are all 3 horses. No, one is a purebred and another one is a donkey. And you're like, what are you going to choose for? One loves you and is going to always act in your best interest, and the other one just wants to chew your hair or kick you in the stomach. So I can't make it more visceral than this. I mean, it's like, it's obvious. The obvious choice is the public blockchain. The only obvious choice for all of us to vote. We all voted for the internet. We all voted for Voice over IP and Apache and all these free services that we're using every day. Most of us don't even know what they are, but 90% of the internet runs on free software called Apache, right? So So all these things are like deja vu all over again. It's just the same movie, right? But here we may not have the same ending. You know, these movies where you can watch them and then you have ending A or ending B. So here the question is, are we going to vote for the purebred, or are we going to vote for the Libra, or are we going to go with the central bank version that's going to print money forever, right? And dilute us forever.
But that's you know, that's sort of the eternal question, is like, we have this thing called Bitcoin that, you know, obviously like the three of us on this call are all about, you know, but and you mentioned this earlier, Alex, it's like, how do you make people do it? How do you raise awareness? How do you get this thing which has all of these amazing qualities into the hands of the people who can really use that? I mean, is that a practical goal?
Look, Ray Dalio said it 100 times. Cash is trash. So when the world's most successful investor, right, his returns are even better than Warren Buffett's, right? When the world's most successful investor tells you cash is trash, even before COVID, right? And you still continue taking your labor, taking your time and converting it into trash, right? Again, you can't blame anybody else. This is not about what JP Morgan is going to do. This is not about what the central banks are going to do. We're not fighting for them. We are fighting for the average person who has to decide, what do I convert my time into? Because that is where the economy is. GDP starts only in that place. It doesn't start anywhere else, right? So if each one of us realized that cash is trash and I need to move myself to gold or digital gold or anything else, because I cannot have this cash because it gets debased, it gets stolen from me, right? The scissors just keeps cutting, and fees upon fees and fake accounts. And like, again, Deutsche Bank got caught doing $1.3 trillion worth of money laundering. 1.3 trillion with a T. Nothing. Not a single person went to jail. Like, so what do you need? Like, you know, like what needs to happen for somebody to get actually, you know, I came to this country in 1988, and a year later, the S&L crisis hit, and 3,000 banks managers, bank principals went to jail. 3,000 people went to jail. That's the last time the system worked. Moral hazard worked, everything worked. Since then, the system stopped working. You understand? So you cannot fix that system. Anyone who's fighting, there's a lot of people who are fighting, okay, we're going to fix the system, we're going to go to Washington, we're going to do this, we're going to do that. All of that is a waste of time.
So really these open source things, that's why that's the answer, you know, and maybe that's also this whole idea about free market and capitalism being reinvented. Is that
I know we're supposed to argue, me and Miko, but we agree on everything. So like, you just
no.
guys.
Yeah, Miko. So argue with Alex now.
Yeah, I'm happy to have a fight. So, you know, the thing that's funny about your donkey is like you've got this central bank digital currencies, you've got kind of your Bitcoins, you've got your Facebook Libras, right? But like the point that I was trying to make is just to kind of like create more discernment is that the donkey is actually like a Trojan donkey, you know, and the reason why I'm kind of framing it that way is that like at the end of the day, like the only way to stop this is kind of like pure authoritarianism, right? Which is kind of like forced non-consensual exploitation, right? So, you know, if you know, but the thing that's so funny about this is that since Bitcoin by design is sort of designed to resist censorship, it would be really an existential fight by any central authoritarian to stop, right? So I think this would be fairly hard to stop, you know, and so I guess you know, that's kind of what I'm poking at, right? Which is, it's not to say that Libra is better or that a central bank digital currency is better, right? It's more that since there's something in it for everyone, it's pretty irresistible, right? And in general, if you look at the trends around like, you know, alcohol prohibition, or you look at the trends around like, you know, marijuana laws, you know, what you're going to find is that, you know, generally you can't stop people from doing things that they want to do over a long enough period of time, right? Like I think you can stop them for a short period of time, but eventually people will do things that they want to do.
Yeah, I think the term is that you can't fool all the people all the time, right? You
Ah,
can
Bob
fool
Marley.
some of the people some of the time, but you cannot fool. But look, I want to remind everybody that after World War One, the Deutsche Mark basically went through hyperinflation, lost 99.999% of its power, and Hitler came to power through democratic means.
Mm.
Okay? He got elected into power.
Yeah.
It's not like he came and he grabbed power, right? So everything Miko is talking about happened many, many times throughout history. And most empires, the largest empires in the world, all crushed because of debt burdens, right? They all crushed because they spent more than they made. They couldn't pay their army. Like Rome or the Roman Empire failed after 1600 years because they couldn't pay their military. That's it.
Mm.
You know, they used to make currency out of gold, then they made it out of silver, then they made it out of copper, and at the end it wasn't even copper. It was like just some base metal. And again they would cut pieces of it every time you would go into the city. They would take your coins and cut the edges of them because that's how you paid the tax. And basically at the end it was completely worthless. Like no one wanted to be paid in that currency. So that is basically what's happening to us every day. But most people still think that cash is king. And I keep telling them that cash is trash.
I think the thing that's unfortunate, though, is as follows, right? Which is that you described a paradigm, and this is really the paradigm of strong and weak hands, right? And there isn't a stronger hand than someone who can arbitrarily print whatever money they want, right? Because what you described at the very beginning of this discussion is you described a pattern where during the good times, you're supposed to be storing value, because when the bad times hit, then you have some safety net that you've accumulated for yourself, right? And since there doesn't seem to be an appetite for like a social safety net, then, you know, in some ways the little guys don't have any choice, right? In the sense that they have to store, you know, and obviously they can choose what they store it in. So they could store it in gold, or they could store it in Bitcoins, or they could store, you know, but I think the psychology is very much been like, well, nobody is going to help me out when things go bad. And so I don't have a choice, right? Like I have to stockpile, you know, some measurable form of value, you know, because things are going to be bad in the future, or they may turn bad.
Right, exactly. And yeah, this Alex, this example that you gave of these coins literally being cut. It's like, you know, almost like people sort of stop believing it. I mean, it literally the material that the money was made of changed, but also like people stopped believing that the money was valuable. And like, you know, you see what I'm saying here? Like
Look,
yeah.
all these ideas that we think are new ideas, when you go back in history, you'll find them again and again and again.
Same.
They're just changing the form. So the scarcity, right? The Austrian economics, which is basically everything we're talking about is one form or another, is about Austrian economics competing with Keynesian economics, competing with this, again, crazy theory that you can print unlimited debt and nothing happens, right? Modern economic theory.
Yeah.
All of that works until it doesn't. When it doesn't work, it collapses like a black hole, right? Just like a black hole, like a second before a black hole exists, you have a star and it's shining the brightest it's ever shined before. And everybody says, you see, look at it. It's shining so great. Nothing is going to happen. And then you have a supernova and you turn into a black hole. So that's what happens to reserve currencies. They work until they don't work, right? And when they don't work, they become worthless, because you have to understand the United States, we think, again, we're the empire of the world, we're the world's richest country, we have the reserve currency. The reason we're so rich is not because we produce anything. We don't produce anything. There's no manufacturing in this country, right? So what is our power? Our power is the fact that everybody in the world is using the US dollar. Everybody in the world accepts the US dollar. 80-something% of all transactions in the world are denominated in dollar. The buyer agrees to pay the seller in US dollars. It doesn't matter if you buy aluminum, or if you're buying oil, or if you're buying gold, all those things are denominated only in one currency. You cannot buy it in a different currency, right? It's very difficult to buy gold in yuan, right? So because of that, we get this float, we get this free circulation of money that basically is free. The United States can print trillions of dollars and nothing happens until something happens, because China used to have 3 point something trillion dollars in reserves. They now have less than $1 trillion in dollars, right? They basically got rid of all the debt. All of this paper that the Fed bought came from China and Japan and Korea and so on. So, and then we're running out of that. There's no more to buy. So all I'm saying is that we are at the end of the US dollar as the reserve currency of the world. And it's not a good thing. I'm not saying, oh, great, let's replace it with Bitcoin or something else and we live happily ever after. I'm saying that Bitcoin is going to be successful because we're abusing this dollar. Instead of the dollar staying with us for the next 500 years as a reserve currency, we're going to lose that status, and the economic activity, the GDP, all of us in the United States are going to see a major decrease in the quality of living because we're not going to be as rich.
Right, right, exactly. And so, and you said earlier also that, you know, it sort of doesn't matter, like there's these people in Washington who are fighting for policy change, but that ultimately that's not really going to do anything. So are your thoughts about the election sort of the same thing? Like it almost, in this sense, it almost doesn't really matter what happened.
I was born in communism. I grew up in socialism in Israel. I worked in Europe. And then I came to capitalism, what I thought was capitalism. And I've just seen it deteriorate. You know, like the question that everybody asks is, are your kids going to do better than you? Right? And I think there was a recent survey where I think over 60% of Gen Xers said, no, I'm not going to do better than my parents. Right? Yeah. So it doesn't matter who gets voted. It doesn't matter if it's Biden or Trump or some third guy, right? That's not the problem. The problem is not who is the politician. The problem is, are we going to change this trickle-down economic idea that you know, the modern monetary theory is based on into something, again, that is not based on how much profit you can generate? Today, who are the people we celebrate? Who are our heroes? Warren Buffett, Ray Dalio. They extract value, and we say, oh, look at him. He's so good at making money for money, right? These are our heroes. And just 30 years ago, there were the people who went to the moon. There were the people who invented something. There were the people who actually created
value, right? Yeah.
Created value, exactly. So we need to go back to that. And you need an earthquake. You need the dam to break because of a 7 Richter magnitude earthquake for everything to change.
Yeah. Miko, do you have any comments, any thoughts on that?
Yeah, I mean, I do think that it's kind of unfortunate, right? I mean, you know, I think a lot of what Alex is saying, you know, it does seem pretty inevitable based on what's happening. You know, I think that, you know, there are other dimensions of, there's two schools of thought, right? Like, you know, with respect to this upcoming election, you know, like, I think that from the perspective of, you know, really looking at the economy, you know, I think there's a valid case to be made that, you know, having, for example, large infrastructure investment actually does create kind of potentially a primary economic stimulus, right? Because people are actually building roads and they're actually, you know, doing things, right? So I would say that, like, you know, on the one hand, you know, there is a lot at stake, and, you know, I think it's important not to overly both sides this election. You know, there's a bunch of factors that I think are significant that should be considered. You know, not to give away my hand, but, you know, things like environmental issues, and, you know, so that it's not a no difference thing. But I would say that across the dimension that Alex is referring to, like, you know, the depth of the problem in the monetary system is not something that anyone is talking about making any serious fixes to. So, you know, I think you know, you know, so as much as you can admire kind of reformists for the banking system, like, none of them are talking about the depth of reform that could make any impact to the
Look,
size of the problem.
what we've done is effectively an airdrop, right? The government did a $2 trillion airdrop
Literally.
on the U.S. population, and most people took that airdrop, put it in Robinhood, bought some options on Apple, and thought they're gonna live happily ever after, right? Because the stock is just gonna go to the moon, you know. So it's not like the crazy people in crypto land, the Twitter or the Telegram guys live on some crazy world. The rest of the world behaves exactly the same way. What's the difference, you know? So I think that we live in a world where really reality doesn't apply. It doesn't matter what you think, right? The market should be going down. It's going up, you know, and so on. So I think the politicians don't, even if they wanted to, they don't have the dry powder or the ability to affect change the way it should be affected. And usually change, look at fintech, right? Fintech exists now for, I don't know, 30 years. Show me one fintech company that actually disrupted JP Morgan, that caused a scratch on any bank, right? Just show me an example of somebody. You know, not a single company can show you that it did anything, right? Yeah. So why is that? Because the system is resistant to all of that. You cannot make change. The only way you make change is if you, again, replace a TDM network, right? A time division multiplexing with a TCP/IP network, right? That's boom. There's nothing you can do about that. Game over for the TDM network. Now we're replacing, again, the financial system with a system that works in a completely different, it's not a 4-dimension system. It's a 7-dimension system. It's based on the blockchain, on cryptography, on value transfer that is based completely on other rules. So because of that, the financial system doesn't have any chance. It's just a question of time. Is it going to take 1 year or 5 years or 10 years?
Right, exactly. You guys, this is so fascinating. I could talk to you guys all day about this, but I don't want to keep you for the rest.
Now that we solved all the world's problems.
We solved it all. Yeah, we're conversation over. We're done. Exactly. But I just, before we go, I want to ask sort of if there's one really salient point for both of you that you would like people to walk away from this conversation, you know, in 30 seconds or less. What would it be?
Well, I would just say, again, banks are not your friends. And you can be your own bank on the blockchain. That's the beauty of it, right? That you can collect the tolls. You could be the toll collector of your own money. And the toll collecting is interest income, which can get you to financial independence. So if you just think about letting your money work for you instead of you working for the money, then you can see a day in which your money is earning so much that you don't have to work anymore because it's earning enough to cover all of your costs. And that's, people forgot about that. That used to be the case for most of us just 30 years ago, right? Most of us had a retirement plan and eventually it made enough money and we stopped working and we could live on a very, you know, kind of reasonable lifestyle. Today, the interest rate is zero. It's turning negative in most of the world. So it's going to cost you money to just give the bank your money right up front, right? The scissors go click, you know, and when you withdraw, it's going to go click again and so on. So the blockchain works completely differently and it allows you to be your own bank, act in your best interest, earn real yield, and not rely on this system that is bankrupt.
So if I were to kind of take any parting shot, right, like I would say this, right, which is I think you really have to think about the emergence of blockchain, Bitcoin, and blockchain-based assets as really being like the birth of a new internet. I think Alex has made the point very clear with money over IP and this kind of thinking, right? So, you know, if you bear that in mind, right, like I think the best thing that you should probably be doing is, you know, you should probably start if you haven't started. And, you know, starting if you haven't started, to me, you should take an amount, like take an amount of money and imagine it's in your hand and imagine you're taking the money and throwing it into the Grand Canyon, right? Like now you should ask yourself, how much money was in my hand, right, that I threw, right? And if you picture that scenario, let's say you're imagining that you threw $20, right? So that's like, okay, start there, right? Like take the $20 and just do something with it that's related to Bitcoin, like maybe you open an account with Celsius, and like, you may learn that that's a good place and that you want to push in more there, right? But the thing that I think is important is this kind of Grand Canyon exercise is you kind of have to start somewhere, and like it's possible that you could lose the money by putting it in the wrong place, and that happens, right? So like, I'm not telling you should put everything in one basket and put all of your, sell your house and put it all into Bitcoins, like that's, I'm not recommending anything of the sort, but I think if you don't know anything about this stuff, you become what people in the industry call a no coiner.
Mm-hmm.
And like, in a way, if you're a no coiner, you may end up philosophically opposed to it. You may end up kind of going along the way of some of these really kind of, people who are just like, oh, like, I don't know what it is. I never touched it. I never used it. I don't know anything about it, but it's bad. Right.
Bitcoin sucks. Yeah.
Yeah. Which is kind of like,
Wait, are you talking about Nouriel Rubini? Who are you talking about?
yeah, Rovini. There you go. There you go. So, so people, so I think if you're in for $20, you're not a no coiner anymore, and if you're in for $20 and you still think it's like ridiculous and stupid, I give you an official license to shit talk on Twitter about it. Like go ahead, but if you're a no coiner, I'm not going to listen to you. Like whatever you have to say about it is based on zero. It's like people call it in the industry, they say zero knowledge proof, so like, I think I've proven that you have zero knowledge. So like, get out of my face.
Oh my God, I love it. All right, guys, thank you so much for your time. Genuine pleasure to talk to you, both of you, as always.
Thanks so much.
Yeah, keep doing what you're doing. It's great.
Thanks, and you too.
Thumbs up.
For more news, events, and podcasts like this one, visit financemagnates.com. Thanks for listening.